Barclays plc shares slid after the third decline in trading revenue, adding to pressure on Chief Executive Officer Jes Staley, who has staked the bank's turnaround on its securities unit. The British bank reported a 34% drop in fixed income revenue in the third quarter, according to a statement on Thursday. It trailed most Wall Street rivals that posted an average 22% decline, but performed better than Deutsche Bank AG, which had a 36% fall. The shares dropped 5.3% to 186.50 pence at 8:27 a.m. in London. Barclays has lost around 16% this year, making it the worst performer in the Bloomberg Europe 500 Banks and Financial Services Index. The decline in revenue will make it harder for Staley to win over some investors skeptical of his strategy to build up the investment bank, which has long been Barclays' least profitable unit. It also increases pressure on the CEO, who is under investigation by the UK's Financial Conduct Authority for attempting to unmask a whistleblower last year. Staley has presided over a 16% drop in the shares since becoming CEO in 2015. Executives today also set new deadlines for achieving profitability targets to help mollify impatient shareholders. The third quarter was clearly a difficult one for our markets business, Staley said in the statement. A lack of volume and volatility in fixed income, currency and commodities hit markets revenues hard across the industry, and we were no exception to this trend. Trading fall. Staley has made building up the investment bank the centerpiece of his strategy to revive earnings at Barclays. With division head Tim Throsby, he recently unveiled a plan to reallocate capital from low-returning lending activities to higher-risk trading desks within the division, including distressed debt and exotic products. We underinvested in technology and balance sheet in the markets business in the last couple of years, and we need to find a better equilibrium there, Staley told reporters in London. We'll get the markets business to where we want it to be, to give the securities unit more capital to work with. HES sold down the bank's African investment and European consumer networks, slashed shareholder payouts and cut loose tens of thousands of low-returning corporate clients to prioritize the world's elite fund managers. Equity and credit trading each dropped more than 20%, while rates and foreign exchange trading, known as macro, fell 40%, according to the statement. Macro was blamed for dragging down results in the first and second quarters as well, prompting Throsby to reshuffle management and hire new traders to turn around the desk. There's still a lot of heavy lifting to do, and the investment banking business saw revenue weakness, Jefferies Group LLC analyst Joseph Dickerson said in a note. Fixed income represented 12% of group revenue in the quarter, and it will be important to get an update from management as to where the company's strategy lies in such products. The return on tangible equity at the overall corporate and investment bank fell to 5.9% from 9.2% a year earlier. Missing estimates. While Barclays' overall pre-tax profit rose 32% to £1.1 billion, $1.5 billion, it missed the £1.4 billion average estimate of 12 analysts compiled by the bank. Flattering the results, the bank did not take another charge for the payment protection. Its operating income fell about 4% to £4.5 billion, and the lender's key common equity Tier 1 capital ratio was flat at 13.1%. Income at Barclays UK fell 5% as both the domestic retail and credit card operations reported drops in revenue, according to the statement. Loan impairments fell 43%, soothing concerns about a consumer credit bubble in the country. Executives set new targets for costs and profitability, including a pledge to generate a return on tangible equity of greater than 9% in 2019 and more than 10% the following year. It's targeting costs in 2019 to be between £13.6 billion and £13.9 billion. The lender also updated investors in a separate statement on its plans to create a ring-fenced retail bank, which will be called Barclays Bank UK plc, to comply with UK laws requiring consumers to be protected from trading losses, with assistance by Stefania Spezzati and Donal Griffin.